Hey everyone, this is Jeff, LA Fintech Crypto Wars. Kind of go over the week in the fintech and crypto side. This week there was actually still quite a bit of news and things to digest from the previous week, and we're going to kind of go through it. Let's see, I'm going to share my screen right here. Hold on. Okay, hold on a second. Let me pull up. All right, so last week we saw Google and Facebook ban ICOs and crypto ads within their network. And here, hold on, let's see. Retweeting it, there it goes. I just retweeted this. So yeah, Facebook, Google last week banned ICO crypto ads on their side. Now we're seeing Twitter, and then Me Too with Snapchat right here. Here's Snapchat banning the crypto ads. This is, I would say, coming from the FTC. They're pretty much wanting to stay within the guidelines and not get in trouble with the FTC for whatever type of violations. So it's kind of good, but then it's also kind of bad for some of the ICOs that are doing marketing, or if you're doing any type of crypto, it makes it a little bit more difficult. Heard Bing is picking up some of these type of ICO crypto marketing, so I'm sure other networks would start picking this up. So let's see. Yeah, this was kind of interesting. This is a company called Pesa. They actually got popped for being not being a money transmitter. They're unlicensed money service business. They also got in trouble for facilitating money laundering, um, and also on behalf of, I guess, some Ponzi schemes and some other things. But one of the brothers, I guess, took off. But yeah, this is it's a highly regulated industry, and it's very important to kind of follow the guidelines and the laws in the country you're in. This is kind of showing what happens if you don't. Um, and then this is actually, I talked about this last week. This is SEC pilot program on some of the rate structure that the exchanges could charge. And so we see the buy side is pro. They like these low fees. And I would say a big part of this is because their business model has been affected the past couple years, on what they're charging. And there was actually an article a few weeks back, a few months ago. Fund fees keep crumbling as investors go to cheap and passive investment strategies. So some of these mutual funds, I think they're definitely going to like the SEC's, you know, basically tiering some of these fee structures from the exchanges, but it might haunt them. Who knows? And then another interesting that came out this week, um, basically long-term stock exchange. So these guys actually partner with IEX, and basically they wanted to make an exchange that focuses more on long-term holdings of the company instead of the company's being short-sightedness. Currently, we do see that with a lot of their earnings that are done quarterly. So companies aren't necessarily focusing long term; they're focusing more in the short term. So it's a pretty interesting concept, I would say. I think it's definitely something the market may need. Certain companies do potentially want to go this direction, I would say. I guess Eric Rice is part of it, from the Lean Startup. He's one of the founders, I believe. And some of the things the exchange is looking at, increased voting rights for shareholders that hold the stock for longer periods of time, um, restrictions on offering short-term incentives to executives. So there's a few different things that I think they're doing to help companies have more of a longer term focus. So we'll see how that pans out. But I think that's kind of good. But it's also, it goes back into the crypto equity and crypto assets. A lot of this stuff can actually be done on these crypto ledgers. Um, and this is actually, regulators are worried about manipulation within some of these exchanges. So I think there was a meeting last week with the SEC. Brett Redfern from the SEC, he actually heads the Division of Trading and Markets. And, I think they're kind of worried about various different types of manipulation that goes on within the markets, such as spoofing, layering, insider trading, things like that, pump and dump schemes. And, I think they're looking to figure out, okay, what are some of these exchanges going to be exposed to? And as we're starting to notice, these exchanges are probably going to be ATSs, or an exchange, either one. Typically, it's easier to become an ATS. So this is, the SEC, they're definitely looking at this stuff on how these markets are, how the micro markets work. Brett actually has quite a bit of background in the markets, from the Amex to Bear Stearns, to the Chicago Stock Exchange. I think even JP Morgan Chase too. So the guy definitely has experience in market structure. So he's going to probably bring a wealth of knowledge to the SEC for structuring these newer type of crypto exchanges that are going to be popping up soon. And I think even the Winkle brothers a few weeks back, they were actually talking about some type of virtual self-regulated markets, or self-regulatory obligate SROs, basically. So, I think the Winkle brothers definitely they're headed towards the right direction on keeping these markets legit. And that's pretty much for the week. That was the latest things. Also, don't forget the next LA Fintech, April 20. Let's see, I think 24th. So if you missed last one, check out the next one. Definitely meet new people. If you're in the local LA area, come and say hi. And that's pretty much it. Thanks for tuning in. Retweet, follow, give me your hearts. Whatever you can do is cool. Have a great weekend. I'll talk to you later.